Hello, everybody. We have Adam Button back with us today, and a great time to have you back, Adam, especially since you're up there in Canada with the BOC in about half an hour or so. So let's start with Canada. What are you looking for from the BOC, Adam?
Hey Dale, thanks. Thanks for having me. Good to be here. Big day today for Canada. It's a really interesting decision because we have economists slightly favoring 50 basis points, where the market's about 62% priced for 25 basis points. It's going to
Okay.
be one or the other. I mean, I guess there's an outside chance of no hike at all. I think they go 25 and then another 25 in January, and that's all she wrote for Canada. That'll get Bank of Canada to 425. There's also a chance that they go 50 now and a dovish 50 and hold. And I think that's potentially tradable. Because if we
Wow.
get 50 on the headline and they say, okay, that's all, that's a pretty strong signal of that's all she wrote. I think you can fade any Canadian dollar strength on that.
Okay.
Uh,
I wanted to ask about Canada because it's had differentiated itself from dollar weakness. While the dollar was selling off to the 104 level, Canada was not making, USD CAD was not making new lows while the dollar did Friday. And it's been showing some relative strength. Here's the dollar close on Friday, and here's the, Canada close on Friday. Was its second high or low, while
yeah.
Aussie was making new highs and Euro was making new highs, and it's kind of had, been trading to a beat of a different drummer, and no one could really explain it to me. Can you?
It's been
Adam,
pretty
while it was,
stark. I mean, there's not too many days when you see, CAD at the bottom of the currency pile and Aussie or
yeah,
Kiwi at the top. And we've had a handful of those in the last week. And the data's been good for Canada. Friday's jobs report in Canada was strong. GDP report last week was very strong. So, there's lots to like there, but it's commodities. I mean, oil is hitting now the lows of the year, and that
yeah,
was a big part of the Canadian trade story.
yeah,
And all commodities really have struggled. China coming back now, and Canada isn't getting much of a lift from that. I think the market is concerned about Canadian housing. I mean, we've talked
yeah,
about it before, how a lot of variable rate mortgages in Canada. So
yeah,
every Bank of Canada rate hike, I mean, that sucks right
yeah.
into the consumer pocketbook, or right out of the consumer pocketbook. So, and then if you think of Canada, there's been a lot of outperformance in the last year, and that's how Canada's very much tied to the US. Whereas you look at Aussie, Kiwi, more tied to China, right?
Yes,
We have
great
China
point.
reopening, the US economy, a lot of uncertainty there. So I think that's a little bit of the kick. Coal's done very well compared to oil. Say, for instance, natties, also natural gas has come off quite a bit in North America. So, there are a few things to worry about there. It's year end as well. I think these flows are hitting early this year. It's been a choppy market in the last week or two. Really tough to peg down the daily moves right now.
Okay, you're talking about crude, and I know that you're a long-term crude bull.
Yeah.
So, I mean, the question I have for you, I'm seeing a three drive to a bottom formation developing here. We could make one more low, but when I look at this, uh, I think that the sentiment is set up to not give President Biden a chance to refill the SPR at the levels he wants. Do you think that we could be setting up for next year a pretty good buying opportunity in the oil market here?
I mean, that's where you look at as a bull. I mean, you look at it now, you say, well, 74, that's been pretty good in the past, spot to buy. But that 65 sort of range you had on that previous chart, I mean, there's a lot to like about maybe it overshoots down to there. I mean, December's not the most bullish time, but January, February, March, very bullish for crude. So maybe we get a flush here. It's odd we're not seeing more strength on China reopening. I mean, the signs started to come about 2 weeks ago. And now, I mean, even today, it's more clear than ever. I mean, the market could be trying to think about the reopening process and how there might be a lot of people avoiding COVID in China for the next few months as it circulates. And then, it's sort of a slow process, right?
Okay.
People naturally worrying. So I'm concerned about it. I think the market, is starting to think about a harder slowdown next year in a lot of places. But, it's still, it's not a very good picture right now on the technical side, but there's an OPEC call on an OPEC put on oil. Sorry.
Yeah.
They'll come in, and Russia as well. We've got to wait and see how Russia responds. They're talking about something around the end of the month now.
For what, the oil price cap? Is
Well,
that
they
what
might
you're
put in
referring to?
they came out yesterday and say, well, there was a report yesterday say they may put in an oil price floor.
Okay, floor.
Or some kind of spread between Brent, between theirs. And so, and we have to see how much oil this takes off the market, the cap already. There's talk about a lineup of ships in the Bosphorus because of insurance issues. Turkey won't let them through. And so we'll see if the oil dries up or not. There are also signs that China's buying, a lot of Russian crude. So the start of the war, the idea was that a lot of Russian oil was going to come off the market, and it turned out not very much came off at all. So the market, I think, this time is in a kind of show me state, and we'll see what happens.
Okay.
With there.
All right. I know I wouldn't be short down here, Adam, and I don't know what the sentiment is on oil. The oil shares have, really outperformed the WTI last year in a big way, and they're starting to come in a bit with risk off.
We talked about the multiples, right? Like multiple expansion in oil. The only way you're ever going to get more supply is multiple expansion. And it's happened a lot in the last few months, but the multiples are still tight. We talked about the XLE, right?
Right.
Because if you're trading it, 4 or 5 times EBITDA, EV to EBITDA, why would you invest in new production or growing production anyway? You're just going to buy back shares. I mean, a shareholder, that's like 20% free cash flow yield. And who's going to vote, as a shareholder for CapEx in a situation like that? So, eventually you're going to end up with a tight oil market. If you look at global energy oil CapEx spending, it's like a fraction of 2014 or 2018 even. So,
it's funny. The other day you Skyped me and said, for the last several years, the world's been focused on Bitcoin mining instead of mining for copper and gold and all the natural resources out there and oil. So, we've been mining the wrong things. And it takes so long to up production too, unless fracking ended up coming back in a big way. But energy policy here in the U.S. Probably isn't going to change with the recent elections, midterms.
No, I mean, listen, there's ways to get oil out of the ground in the U.S. The big question is whether the Permian Basin has that 20 years of inventory that the EIA says. And a lot of people say by the end of the decade, it's going to be really strained. Yeah. There's only so much out there potentially, and that could be the big rug pull in the oil market. Really, we're setting up for the trade of the decade. I think if you take decades as trades, it always turns into one big theme, right? And it's energy in many different ways, not just oil or natural gas, but energy security, transmission, energy transition. And that's a metals trade. And it is a massive misallocation of resources to be investing so much in Bitcoin mining when we're going to need so much copper. Even silver, I see you have teed up there, or copper to start. But I think copper's really lined up. You were waiting in copper for China to reopen because China's like 50% of global demand for copper. A lot of that's re-exported, but China and copper go hand in hand.
Okay. And the Aussie.
It's 10, 15 years to open up a greenfield mine in copper. So you can have massive amounts of deficit in the global copper market. And there's not much you can do. I mean, there's some substitution to aluminum, but I think in these projects, even if copper prices triple, it's still a small part of the project. So you just pay it and squeeze the market further. Who was out? Glencore yesterday, CEO, huge copper miner trader, saying he expects copper to double.
This technical area is big that we're approaching at this $4 level. We had a huge range, and once we broke down under 4 and we retraced almost to it here, back over $4, so you have to be looking for at least a challenge of the highs.
And I think, you look at 2023, probably going to be a tough year in the global economy. 2024, nothing too special. But then, the demand for EVs, for energy infrastructure, government spending on all of that, mines, there are no new mines coming in, and you have depletion. And, that's when it really starts to kick off. So I think it's copper miners, which is COPX is the ETF, something like that. You have copper mines with 30 years life, 15-year life. And I believe that's going to be the torque. I mean, there's a lot of probably 10x miners out there, and even the big names, Freeport and
yes, I've been watching Freeport.
Whatnot have a lot to like. So you've seen some pretty good performance in the copper space just in the last little bit.
Yeah.
And you're kind of back into that range, right? If you see the miners there. Because I think a lot of it, at some point, the miners will look through 2023, probably 2024. And then the market goes just into a big deficit that there's really no recovering from.
I saw a chart the other day comparing gold to bank stocks, and gold is beginning to take over that spread and lead that spread. The implications, I think, are, not great long term. To me, it says people are waking up to the fact that they don't want paper and they want physical stuff, and gold being a monetary hedge as well.
And it's not just people waking up to it, it's global central banks, right? I
Yeah.
think that I saw some headlines this morning that China was buying gold,
Yeah.
and that increased gold. I mean, if China and Russia are buying gold, I mean, how can you fight that? I think the setup for gold, and then on the macro side, I'm starting to worry more about inflation next year. I mean, American consumers still find a way to spend. 95% of
credit cards
are on 30-year fix, though, so they're not even really.
That's true. They're not squeezed like Australia and Canada and Europe, where they have more variable mortgages.
This green transition spending, infrastructure spending, government spending is a lot of it still in the pipeline. You have capped out a lot of capacity that's still there. China coming back online. India is doing well. Europe is in a terrible situation, so that is negative. There are other negatives as well. But demographics, I worry about a tight jobs market. People aren't going to stop spending so long as they have work. And if you have baby boomers retiring and low immigration suddenly in the US,
yes,
you might have just a structurally tight labor market that keeps spending and inflation high.
So that keeps the Fed hiking, Adam?
Well, I think that, you pause. They're definitely going to pause at kind of 5 around here sometime early next year, probably March, right? And then 5.25, call it, and then maybe wait 6 months. But if inflation still looks like it's going to be 4% in 2024, then they got to start thinking about another cycle up to 6, up to 7. And at the same time, that's another hit to Fed credibility. And that's what comes back to gold, is the market saying, listen, you don't have control of inflation. We don't Powell, he's already walking on very thin ice in terms of his legacy. And I mean, he'll go down if they don't control inflation here, he'll go down as one of the worst central bankers ever. So, lack of confidence is wonderful for gold.
Yeah.
That
speech at Brookings was kind of like Dr. Jekyll, and next week he could be Mr. Hyde again. He flips more than a hamburger.
I get it, though. I do get, because I can see the case for a hard landing too. I mean, if job losses start, businesses lose confidence. I mean, like I said, Europe's a dog. China still has property problems that reopening might not solve. Multiples still very high. If you do start to get the bond market pricing in 6% rates, I mean, there's a lot of money that can flow out of stocks into bonds. If you're getting 6, 7, 8%.
It's already happening, Adam. The TLT's right in front of you. In fact,
it's been a nice rally.
It's been a breakout. And I know some guys saying we're completing, but a lot of markets are kind of in this position and in a way following bonds. Like gold's rallied with bonds, silver's rallied with bonds, and all of these things are kind of stretched. And like copper's had a nice rally. I think that what's happening here in S&Ps, even though we're recovering today, is the fact that we have risk off continuing into the Fed. if today's low doesn't turn into anything special with closes over 39.50. Maybe we wash out, have some type of bear panic into the Fed down around 3,700.
Yeah, it's tough right now. I mean, I guess the market's holding up okay as we're talking, but you have two pretty rough days. And now
Yeah.
you have CPI coming, what, Tuesday, the Fed Wednesday.
Yeah.
You're getting close. Are you going to step in and buy ahead of CPI? Probably not. And then even no matter what CPI is, you have to watch out for the Fed the next day. So, and now you have some tax loss selling probably coming in the year end as well. So I'd be careful, even if the Powell does come out dovish, that people don't use it to sell that pop. It is looking stretched. And you're right. All these correlations have kind of gone to one.
Yeah, it's all one market and it's all the dollar. So, I'm pretty interested to know what you think if that high that we had up here at 14.5 is going to be it. But don't you think that the dollar is going to have, after being such a prolific parabolic move to the upside, at least a failing rally, an echo of prior strength to set up better selling opportunities in the dollar going into 2023?
I mean, and some of the sentiment is interesting. I saw SocGen came out and said dollar yen to 110. That's another,
Okay.
2,000 pips from here, 2,500 pips. And I think, wow, maybe the dollar bulls, maybe the market suddenly hates the dollar. And that makes me think it should rally, right? I mean, U.S. economy, like I said, is holding up so well. That that ISM services number was strong. I don't see a lot of layoffs coming. I don't see the Fed kind of getting that unemployment rate up at 5. I'm starting to think the U.S. could tolerate 5% rates really better than anyone. Europe is a dog. There's nothing to like about Europe. Dollar yen, interesting case, overshot for sure.
So let me ask you then, Society General, they're looking for 110, but isn't it possible that after, again, this was, the move of the year as far as I'm concerned in 2022, wasn't it? Okay. So isn't it possible that before we get to 110, we see 143, 144 first?
I like it. I think at some point next year, it's shaping up to me that we at least flirt with another round of rate hikes. That we start to get uncomfortable. Inflation doesn't come down fast enough. I don't know if that's the first half or the second half. And that is sort of the next. And I think you go up and can even maybe challenge some of the old dollar highs, especially if Europe struggles. You have to worry about Japan having its own inflation at some point. So there's a lot of domestic risks on the yen side as well.
That's a restart of raising rates is exactly what happened throughout the 70s. I don't know how many times, I think 3 or 4 times before Volcker really got draconian, where they would tighten, then they would stop, then they had to do it again. So if we're entering a level where we're near a pause, that could really be the nail in the coffin for the economy, is if Paul has to start tightening again in the spring.
And it would totally rug the market. I think there's such a strong feeling that, okay, maybe the top is 5, 5.25, even 5.5, but then back down, right? That the next move will be back down. And I think at some point we have to contemplate that the next move is even higher. And that, that is going to be a trouble spot. Again, the Fed probably has some breathing room once it pauses. Especially, you've got a lot of energy disinflation now in the pipeline. I thought oil would be stronger from here, but you're looking at now year over year negative pressure on CPI from energy commodities.
Yeah.
And that is really high through March, right? Because that's when did oil peak? March, April?
Don't short oil.
It was March, April. So now you're looking at, in gasoline prices, you're looking at what, I think 40% negative pricing if you stay flat compared to March. So diesel's even come in. They've run the refineries hard lately. So there's but that, again, if you have China reopening, again, the market starts to feel pretty good and it runs hot. And finally, there is a chance that maybe the Fed just nails it. Soft landing, inflation comes down back to 2%. I mean, we had 25 years of 2% inflation or lower on globalization. globalization, maybe it's peaked, but it's not in full reverse. You have automation out there, still a lot of productivity enhancements in technology. People might get back to the office, enhance productivity a bit better, supply chains open. So maybe the Fed nails it. I mean, I'm cheering for them. But that would be the worst case for the dollar. And I think that's how traders need to think about it next year. It's the old dollar smile. If you have that, the Fed nails it, the dollar's going down a lot, and we've seen the peak. If there's high inflation, dollar goes up. If there's terrible growth, dollar goes up. So it's got to hit that sweet spot. And I think, I don't have a ton of confidence in whether it could be a hard landing or it could be high inflation. And so what do is you trade the data. I mean, that's what we do.
Okay, that's
but
what
the data
you do.
The data is it's tough right now. It's month to month, but it's certainly tradable.
You have to be tactical completely in this market, the way I look at it. To put 3 days together in a row, 2.5 is kind of a long-term directional trade nowadays. So,
how trading is. You need conviction, right?
Yeah. So, okay, I know you have it, and you've been thinking. You're a thinker, Adam.
Well, I would think right now you just take what's given to you if you want. China's reopening. I mean, that's it. Yeah, it's up 10, 15%, whatever it is now. Had a bit of a
like
Hong
Baba.
Kong had a tougher day. Baba, it's like what? Didn't we talk about Baba last time I was on?
Yeah.
I believe we did. It's like 4 times earnings, right? And it's up like 100% since when we talked.
Yep.
I'm sure we talked about it. The valuations are so cheap. China's reopening. I mean, you hate to chase a market that's rallied that much, but anything, MCHI or FXI or
our trader Mike Venezia has been all over the Chinese stocks when people said they're not investable. His answer is, you know what? They're tradable.
And then that's the bottom. Remember, Tiger bailed. I think Tiger Global bailed on China like October 5th, and it was like dead on the bottom.
Yeah.
But I get the risks around China, but they're not going to disconnect. So, okay, not 100%. So, whatever.
Yeah, I'd buy it at 75.
Yeah, it'd be nice to get it off here a little bit today, but it ran right into, what is that, the 50 that you have up there?
Yeah.
Yeah. Ever run into that?
The 200. That's actually the 200.
Well, there you go.
All right. So
we've
got China case now.
So China, I think I have some conviction there. We talked about the precious metals, and I like it. I mean, there was an awesome opportunity there. Silver as well. I think I underestimated the silver demand from the green transition as well. Need a lot of it.
You did, because I was pounding the table on our last interview about silver.
Yeah,
remember talking about the miners and everything, and
miners.
So you've had a change of heart then.
I mean, that was a gold. I mean, I just usually take gold, silver. I almost look at them as interchangeable, but there is that bit of more industrial demand for silver. That is, and yeah, you absolutely had that one pegged, and I think you had the timing. I mean, it was straight like a month ago.
I made a few mistakes tactically on the way up, but here's the picture in silver, Adam. If we take out, we take out 22, you have to be careful. There could be, that could be part of a dollar recovery. So thinking about 2023, and I know you're getting ready to trade the BOC. And when you come on, I kind of ask you to come out of your element when I'm looking for something like a theme. What's the theme for 2023 that you short-term trade off of that narrative?
I mean, this is a funny one. Weather in Europe is going to be the first one. I mean, you get into weather. The weather guys are nuts, right? I mean, because predicting the weather is insane. We've made tremendous advances though in predicting the weather. I mean, you've been around for the 3-day forecast used to be even.
I've been around for a few centuries, yeah.
And I mean, you can count on the 7-day in most places now, and they're getting better even at the longer ones. Europe's looking cold for December. I think there's a bit of complacency around that, so that. I think it's headline to headline for 2023 that's my kind of market too. It's, some of those black swans out there, whether it's OPEC, Russian war, weather, and then inflation and just economic data is the big one. So I do think though it is in the metals. It's set up very, very nicely. Again, waiting for that great opportunity in copper, and it's come just now and in the last month. And so I like that one. Again, look out. I think the market has picked up on a lot of it. It's industrials. I mean, tech can still fall a long way from here, I think. Especially if we get that rate scare, earnings matter again, multiples compress, bonds. Everybody was waiting for that big chance to buy bonds. We're in here now. Maybe there's another flush. I don't know.
I think the low might be in for a while.
I mean, that four, I mean, even twos now, you're still getting 6% on a quality two.
I gave Newmont the Candle of the Month award. That's the monthly candle yesterday, last month.
And I think there's going to be a ton of value in the people who can pick the names. This not I'm in it, but I'm not, I don't have a ton of experience in the names. But yeah, I mean, a lot of these Australian companies, anybody who can control cost inflation. I mean, it's brutal on some of these names. They make a budget, or they made a budget last year, and it just got blown up. You understand it because it's, it's diesel costs. It's everything.
That should be improving for the miners then, with energy prices coming
Hopefully
down.
They can make the budgets.
Margins.
Hopefully. And then I think on an FX perspective, there's a lot to like about commodity producing emerging markets. They've held up really well this year. Brazil, in the last bit, has been strong. Mexico has a lot going for it, which is right out your backyard. You can see Mexico from there, can't you, Dale?
Yeah, Buenos dias.
Hola.
All right, yeah. So there's the peso. You like it?
I mean, it's gotta come at some point. I mean,
there's the real.
Yeah. I mean, that it's held up, right? In a year when the dollar did very well.
A lot of the emerging markets held up.
The commodity exporters, right?
Yeah. Well, I tell you
some
what,
of that Southeast Asia as well. Very interesting. So I don't think natural gas is done. I think, US gas, sure, it's a lot landlocked, but I mean, the LNG trade, there's so many big secular themes right now that are so much better than whatever the wave is going to be in 2023, because it's a tough economy to call.
All right. Well, I'm going to give you an old Chicago Board of Trade chant. Beans in the teens. Oh, wait, they've been in the teens forever.
I remember when it first hit that in the, I don't know if it hit in the 70s or 80s, but about 2020, 2026 or 2006, I think it started.
Yeah, beans in the teens. How about, I don't know what rhymes with 20s, but I think that could happen.
Black is in, I see it on your chart there, lithium. And I think this is the ultimate two-way trade. So lithium, the trade, what's scary about building a lithium mine is it takes you like 10 years, right, to permit it, probably 15 to permit it and build it. And it costs a lot. And the risk is that in 15 years, they have some other technology for batteries and you don't need it. So it's a zero. Now, alternatively, the people don't build it because of that risk, and that nothing new comes. And then there's just not nearly enough lithium. So
that
it's like
really binary.
It's completely binary. And there's so much. Listen, mining's been beaten up anyway. So I take the long side on it, because mining is not getting enough money going into it. Given the odds of what could happen, and there should be more money going into lithium. But you have like Lithium America's trying to invest down in Argentina, which is a problem into itself. Thacker Pass, if anyone looks that up, you can't build in the US because they're worried about the birds.
Me too.
Yeah.
I heard an owl this morning, Adam. Really? I get up so early. I heard an owl hooting this morning.
Do you even see the sun? But something like that, I mean, it could be phenomenal trade. I mean, like 20x on stuff like this, because
I'm right. Okay, that gets a magic marker. And I could talk to you for hours, but I know you have to get ready for the BLC. And what do you have, 7 minutes here, buddy?
Yeah, it should be. The stocks gave it up just as quick as they rallied here. So it's been a lot of that lately, eh?
Yeah, I'm looking for 3,700 S&Ps and then back up the truck.
I mean, who had a lot of conviction in this rally? And there's just no conviction in the market.
There
And
you
I
go.
don't believe in anyone who says they have conviction in any asset class right now.
I do. I'm a bear during December. I think it's going to
Well,
trade.
I get it. Sure.
Yeah,
Sorry, for the month. And that, but that's the call, right? Because
right.
it's rallied 20% from the lows. And you say, listen, this is built on a house of cards.
Well, you
And
know what?
see the price action this week, and like tech is just folding as it
Yeah,
should.
yeah. This is the narrative that big money, Adam, is going to run this market down to 3,700 so they could accumulate it, just like they were distributing it here.
What are they going to buy to a 3,700? Facebook? I mean,
No. The new wave, the things you were talking about. Have a shopping list of things that are showing very positive movement, like copper,
right.
and use this break in the S&P to buy things like Freeport and Copex, and and this is really a great asset test for your themes. Have risk off happen and see what holds up the best. Those are your buys.
It's true. And be very careful about tax loss selling here now, and then some, and moves in early January. I think I think time to pull the trigger is probably the first or second week of January, because that's when the dust is going to settle.
I feel the same way. What a great conversation. I told you it would be.
Yeah, thanks so much for having me.
I really, I learn every time we talk, Adam. I wish you the best of luck on the BLC, and more than that, a
Merry
great
Christmas.
holiday. Yeah,
Merry
Merry Christmas to you and your family. And 2023, look forward to us continuing to collaborate and try and enlighten people with what we're seeing.
Always such a pleasure, Dale. And yeah,
buddy.
happy returns to you in 2023. And we're going to make sense of this mess. And we get through the Bank of Canada here first. So my call, I think we'll see 25, another 25 next month, and probably a bit of a dovish take here. So a lot of that's probably priced into CAD. But if they do 50 and it's dovish, I'd fade any CAD strength.
Okay, my trading warrior brother, Adam Button at FX Button and at Forex Live.